So there are several lending options that are available to you when you're buying a home. Today we're going to talk about everything FHA. Make sure you stay through to the end because I have another FHA option for you if you need to have improvements and repairs included into your mortgage. So the first thing that we're going to talk about is the minimum FICO score. So the minimum FICO score for the FHA loan is 500. Now it goes up from there, but the 500 is the minimum and it depends on what your down payment is going to be from there. So if you're at a 580, your down payment is going to be 3.5%. You can go below a 580, but your down payment could go up to 10%. There is a 2-year employment solid history that goes apart with these requirements. Now, there are exceptions to that. One of them being if you transfer industries. If you move jobs to another job within the same industry, there are exceptions that I've seen. Along with the 2-year employment history, there has to be 2 years of solid income. Now, it can vary as well, but it has to be justifiable if there are any gaps between there. Next is debt to income. So when they go through your financial statements, they add up all of your incomes, all of your expenses and debts. Now, the income ratio is 43%, and it can go up to 56%, but there has to be some exception in there, and every lender is different, but there is a range. Now, did you know that you could also use your FHA loan for not only a single primary residence, but you can get it for multifamily as well, up to a fourplex. And so right now I'm gonna go into the details of what the loan limits are for each one of those different type of homes. So if you can see from the screenshot right here, for your single primary residence, it's $441,600. For a duplex, $565,300, triplex, $683,350, and a fourplex, $849,250. Okay, finally, what I promised you at the beginning was a product that FHA uses if you need any repairs or improvements on the home. It's an FHA 203K loan. Now, this allows you to include any repairs or improvements into the mortgage balance so that you can repair and fix up and reestablish the home while you're either living in it or while you're living outside of it, repairing it so that you can live in it as your single primary residence. This option is really cool, and you don't really hear about it because there are a few pros and cons to it. One of the pros is that you can borrow up to 6 months of monthly mortgage payments while you're improving and repairing the home. A couple of the cons are the interest rates are a little bit higher, and it's a longer process with paperwork just because there are a lot of more intricacies within the program. Now, this is one of the several programs that lenders offer. If you have any questions about these, please let me know. Leave me a comment below or send me a message. There are a lot more to cover, which I'm going to be covering in a series of just solid lending so that you can have the best information at your fingertips. Have a great day.